I mentioned I want to talk a little bit more about Apple. Joining us right now on the phone is Piper Jaffray Senior Research Analyst Gene Munster, who is ranked best Apple analyst according to the Bloomberg rankings. He's one of several analysts to increase his price target on Apple today, less than 1 week ahead of the company's earnings. Gene, good to have you back with us here on Bloomberg. Let me ask you, your call today, why did you raise the price on Apple today, less than 1 week ahead of their earnings release?
Well, the bottom line is that the numbers are going higher here, and ultimately is that the Mac is going to be the big surprise here next week. The iPhone, we have a pretty good idea where that's coming in at. And at the end of the day is that these two are reason enough to bring the numbers higher. The bigger picture is that the iPad is going to add yet another catalyst to the story here in the next 6 months. So the combination of those two, I think, is why we feel confident at bringing the price target to $299.
That iPad, we got some news from the company, too, as well about the iPad, certainly seems to be living beyond the expectations of Apple. What about your expectations?
Well, initially, I think that for the first 10 days is that it's going better than what we had thought. We talked today about our numbers at 1.3 million. If they can keep production going, we think that it can be 1.8 million. So typically you see a big spike in demand and then a quick drop-off, and we haven't seen that same drop-off here with the iPad. A lot of people are wondering whether this is going to have some sustainability to it. And if we're going to gauge just on the first 10 days, it appears that this will be it'll be a meaningful catalyst to the stock here in the next 6 months.
All right, and also good to hear from the company, Gene, that they've taken a large number of pre-orders for the iPad 3G models for delivery by the end of April. I mean, good to hear that. That shows some momentum here.
Exactly. That's probably going to be about 40% of the total iPads. And the big picture here, when you think about Apple's market cap and what's going to get it to go higher, right now we're looking for iPad to be 8% of total sales next year, but this is something that could be, has the potential to be greater. And based on that, I think that there's reason for the story to continue.
Let me ask you, Gene, because Goldman also out with a note on Apple, and they said they've got a neutral rating. They think the near-term upside is limited. They say they think the company's positive long-term outlook and very favorable investor sentiment are mostly captured in the stock's year-to-date outperformance. So they don't see a lot of upside, certainly in the near term. You think they're missing something?
Yeah, I think what they're missing is that Apple is going to the numbers are still going to incrementally going up. And second is that they're going to be capturing market share from other companies. And these are products that we're talking about. For example, an Apple television would be another area that they could be getting involved in. So I think there are other parts of the story that they just really don't have a good pulse on that we believe will be incremental to the numbers.
Now, because of the strong demand on the iPad, Apple did say it's postponing the international launch of the iPad by about a month. Is that problematic or no, because there's not a heck of a lot of competition out there, certainly not internationally?
Well, it's definitely egg on Apple's face because they promised it. They try to stick to those dates. Beyond that, the embarrassment, I think it doesn't really change anything because there's really nothing else out there that's competing with it right now.
All right, we're going to leave it on that note. Hey, Gene, good to get some time with you. I know you're overseas, but we appreciate you finding that time for taking stock in Bloomberg. Gene Munster, everybody, of Piper Jaffray.